Byron Lotter, Portfolio Manager at Vestact, still with me. Very difficult to find fault with the market today. And of course, I suppose not difficult. It's obvious some of the sharp drop-offs in the likes of Mr. Price. But overall, the market really in buoyant mode.
Yeah, I mean, we had a big rise in the US market yesterday, and we're very close. I don't know what's been happening now, but we're very close to those all-time highs. So the South African market obviously playing catch-up, and then, of course, we've had a massive weakening in the rand today, and that's spurred the likes of Richmond, British American Tobacco, and then the commodity stocks. So interesting to see. You know, it's brought back that whole drop we had over Italian election issues. So we're back coming close to our all-time highs. But I think it's going to be quite a bumpy road for a while now.
People are very uncertain. There's a sense of, how's this all going to play out in Italy? What does it mean for the EU? We're talking again about the stability in that part of the world. When it comes to that GDP figure, 0.1% revision upwards for the fourth quarter in the US. What's your sense as to how the US economy is doing right now? Also that, again, some comments from Ben Bernanke.
No, you've got to look closer into those numbers. I think durable goods consumption was up over 2%. Probably the biggest reason for the fall, and this is revised, so we've already seen this number already, I think it was 0.1% down originally, is the pullback in spending from government on defense. And that's supposed to be a good thing. You know, biggest issue in the US over the last few years has been their deficit. So them pulling back spending is what everyone wants. And making up for that pullback is consumption from the US consumers. So that's definitely a good sign. I think it's going in the right direction. You know, it's hard to judge the economy and what it's going to do in one quarter. So you've got to look at the bigger picture because the quarters can be very volatile.
You mentioned British American Tobacco. The stock up 1.6% today. Full year earnings, adjusted earnings, up by 7%. That's okay. That's 7% growth. But the fact that they've got falling volumes, is this a stock that you'd stay away from?
Yeah, it baffles me. You see 7% growth in earnings.
I know it's a stock you love to hate, actually. I recall that.
Yeah, I mean, growth of 7%, revenues up 4%, yet it's priced like a growth stock. You know, it's priced 20 times earnings. You know, that's more than what Discovery trades at, and Discovery on the opposite side of the spectrum, trying to stop people from smoking. But yeah, it's definitely one I would stay away from. Yes, it's a cash cow, and it's returning money to investors, and they're doing lots of share buybacks. But where's the growth going to come from? The sticks are dropping, governments hate them, so I really think that they're due for a big PE re-rating coming soon.
Interesting. Yeah, as you say, pointing out, the growth of 7% relative to where the stock's trading. What about Massmart? 186 Rand, flat for the day. I suppose the market was pricing in the trade update numbers. 21% drop in first half profit. Walk us through the performance of the moving parts.
Well, they had to put in an extra 140 million to that development fund, so that's why earnings dropped. I think if you take that away, they were up about 6%, which again, they're also a company that's priced for big growth. But it's one you definitely have to be patient with. They're putting a lot of money into growth for the future. They're building distribution centers all over the place. They're buying a couple of macros, which is costing them up to 500 million. These are macros that they originally leased. So they really are gearing themselves up to, what I said in our client message today, literally to supply a continent. And they've got the biggest retailer in the world with all the expertise that you could ever ask for on their side, guiding them in the right direction. So, that's why the company is trading on such a high valuation. It's similar to, what you'd see in the States, Amazon. That company barely makes any money at the moment, but the market cap is massive. You've just got to be patient with these companies because the earnings will come. You can see that the business model is extremely exciting. They're doing the right things, but you've got to wait. So you can't look at the valuations of this company. You've got to look at the potential in terms of sales and where they're going, and the kind of business model that they're taking up into Africa.
Do you think that they will be able to do what Shoprite has done already? I mean, just looking at the South African goal when it comes to grocery market share, they've already got 10%. They want to double that to 20%. But Shoprite already has a strong foothold, the knowledge, the kind of hard learnings over the years. Do you think that they're going to be able to do that and do it even better?
Well, they do have the knowledge because they've got all those Walmart execs that came across, and Walmart have been doing this into developing markets all over the place. I know Africa's a completely different case, but and there are definitely going to be challenges. The growth in Africa is unquestionable, but big infrastructure is required. You know, you've got to shift the mindset from the daily market to the shopping center, which is one of their biggest challenges. So, you know, they definitely do face a lot, but the potential is massive, and that's what shareholders are looking for. So I think there's more than enough room for both ShopriteGiant and Massmart up into the continent and in South Africa. So it's going to be interesting to see how they play it out. But you know, the management team is well respected. Grant Patterson has been there for a while now, and you know, he's regarded as one of the best CEOs in the country. And like I said, they've got the Walmart experience on their side.
Yeah, let's look at Marion Roberts, because you heard what Henry Last had to say. Scaling back on Middle East, not seeming optimistic on the South African market, but it's Australia and their positioning within the resources space, oil and gas, which they're pretty positive on. Does that mean you go and buy the stock?
No, unfortunately, we're staying away from the sector completely. I mean, when they talk about scaling down in the Middle East, when they originally did that, they had to focus completely on South Africa because, you know, the global market was in turmoil. And that all the big players had to do that, and the competition in South Africa is so extreme that we're seeing, you know, talks of collusion and so on. When you're dealing with margins of 4 to 5%, there's very little room for error, and if something does happen, which we've seen with Marion Roberts, you know, a lot of litigation issues and non-payments, the company really does struggle. So it'll be interesting to see how they go forward, and you know, what their relationship's going to be with government contracts and that 830 odd billion rand that Pravin has earmarked. But it's a sector that we'd stay away from completely.
You're sitting on the sidelines and watching this one out.
Yeah.